Good morning, traders. It is Friday. Happy Friday to you, the 2nd of October, 2015. It is 8:06 a.m. Chicago time. Sorry about the delay. There was an issue with the broadcasting system, and that's now been fixed. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Sure, most of you know that the non-farm payrolls came out, and they were much worse. Probably, I think I read somewhere they're the worst since a while, long while. But let's take the news from the top down. ECB's Draghi came out last night and said that the Eurozone growth is returning under our monetary policy. Further integration is needed within the Eurozone. ECB's Weidemann said the ECB should keep a steady course. No need for more stimulus now. And these comments, along with some risk-on sentiment, has caused the market to rally overnight. The market pushed quite a bit. It pushed to 23, then 28.50 on the S&P 500. The federal budget extension was passed a couple days ago, but the Treasury Secretary Lew says that the U.S. would hit its debt limit much earlier than expected or scheduled. So that's another thing that's looming on the horizon. Another year, another prospect of um, the federal government shutting down, thanks to our incompetent politicians. Um, but overall, I don't know how that's going to play or how deeply that's going to play into things, but that's something to just keep on the radar. September change in non-farm payrolls came in 142,000 versus 201,000 expected. Change in private payrolls 118,000 versus 197,000 expected. Very, very, very big miss. September unemployment rate came in line at 5.1% versus 5.1%. Looking ahead at today, we have ISM New York 15 minutes after the open at 8:45 Central, 9:45 Eastern, no estimate. At 9 Central, 10 Eastern, we have factory orders, negative 1.2% expected. And at noon, we have Baker Hughes rig count. Not really sure that has an effect anymore. Also, we have Fed Speaker Harker, who just came on about 25 minutes ago. He is the replacement for Plosser, and he's the Fed president for Philadelphia. And he was not expected to make any comments regarding the economy, but still, given the non-farm payrolls release, that we need to be attentive. Later on today at 11:30 Central, 12:30 Eastern, we're looking for Fed Speaker Bullard, who's speaking on monetary policy. We will pay attention to that. At 12:30 Central, 1:30 Eastern, we're looking at Fed Speaker Fisher, also speaking on monetary policy. That's it for this for the expectations. So here's yesterday. Yesterday, or here's the overnight session chart. We opened right where we closed. We're closed on a rally. We're closed on a double top on the day. Double tops on the day, historically, statistically, have a very poor probability of holding into the overnight session into the next day. We ended up pushing up to 123, which was our key point of control. This number here, I'll show you where it comes from in a minute, is a big area, big balance area. We pulled back about 11 points, 10 and a quarter points, and then the European markets opened right in here, and we just climbed from there. Here's the non-farm payroll. We pushed the scene of the crime on non-farm payroll was 1928, 1928, and we pushed straight down into the 1895 area, and we continue to slide. Remember from yesterday, from the last couple of days, 1892 is the big dividing line on the profile. We'll look at that in a minute. But you can see here quite a big move. almost 40 points lower from the high on the non-farm payrolls. Now, what's confusing, of course, is trying to interpret that, right? Uh, non-farm payrolls coming in, non-farm payrolls coming in means that coming in much lower means that the Fed is less likely to increase interest rates, which should be bullish, maybe, but it's not so far. Today, I would exercise a lot of caution given the magnitude of the move and the fact that it did not auction much at all in between. So if I showed you what the book looked like and liquidity looked like, you would see there's very little that traded in between. So even though we have a thick profile, there's a lot of volume. The volume is about almost 4 times the usual for the overnight session. A lot of participation here, but we have a lot of structure above that is likely to be retested, and it could happen today. So just be careful today. Not a good day to be stubborn as always. Now let's go back and look at what we did yesterday and how the market behaved. So yesterday, the expectation was for responsive selling. So the market was expected, if you watch yesterday's Trader Bite, the overall plan for yesterday was to open out of range, which we did right here, and to open out of range and then to push up towards 17 to 18. 17 to 18, it went to 17 and a quarter, and it was expected to rotate down to 1901. That's the primary hypothesis target. It worked out almost too perfectly. It went to 17 and a quarter and turned over and pushed down to 98 and a quarter down here. And then from there, the market attempted to get out of the range, and this is a very important test here to get back out of the range. Remember, the day before, the high was weak, a very incomplete high there, and we're looking for it to test and fall back in, and it actually managed to do that. It basically tried to get out of the prior day's range to Wednesday's range, and then it just started to slide back through again, and that's what was expected. It did push through lower than expected here. I was looking for a 9 on an extended move, a 92 on the extended move. Again, there's that level of 92. Man, I can't draw at all today. 92 right here. Expected 92 on the downside. It did push through by about 7 ticks. Consolidated, and then it rallied back through on the close. I was not anticipating that rally. For those who are in the AAQ webinar, the Ask a Question webinar that was held yesterday, and in fact the video's out. You should you can find it on YouTube. It's gonna keep posting it for the next couple of days. While we're in the webinar, we were talking about the conditions that we were looking at, and the anticipation was for it to push through to 1901 for a test, and it was not expected to fall. I set that up live, and I told the viewers to keep an eye on it because it's likely to rally. However, I did not anticipate this, and I don't think there's a way to anticipate that. It did finish very strong yesterday. I'm not sure what that is. I don't know if it's short covering into the non-farm payrolls or a hedge or what, but there's a fair amount of buying on the close with a pretty decent delta. The delta, again, not reflective of the range that was taken. We had on this move, we had 14 points of range, and the delta only moved about 10,000 contracts to the positive side. That's, again, very light. It just seems to move up, but it's not really aggressive on either side. We're not seeing aggression on those moves up. I think it's showing us that the buyers are still very timid. So where do we get that 23 from? The 23 comes all the way back from these two balance days here. The point of control of these two balance days is 23. As we extend the profile, it stays as 23. Even as we push farther into day 4 from last week, it stays at 23. So this was a big balance area. You could see that it's very heavy. There's a lot of volume here with the point of control at 23. And as we push this forward, it continues to be 23. You can see the point of control unmoving 23, 23, 23. And if we include yesterday, it stays at 23. There's just not enough volume that occurred down here to change the view on the most traded price, or the price that brought in the most interest in this area. So as we push through on the overnight session, the first test was, as I showed you, was up to the 23 on the nose right here before it rotated down 10 points. A nice little opportunity there in the overnight session for those who moonlight and trade the Globex session. But overall, what I was looking for on the non-farm payrolls is, since we were up here on the non-farm payrolls, if it had come into line, the expectation it would be a very muted response. If it came in line to slight miss, higher or lower, the expectation is it would circle around, and that was my anticipation for today on the hypos. The hypos, I was looking for some sort of a gap, some sort of a test down, just like yesterday, and then a push into the 23, chop, and then continuation move to 1935 for the day. That's changed considerably, especially since we're trading down here. Where do I get that 92 from? The 92 is from the, if I move this profile over to just see what volume occurred in this area, the 92 has been in play for quite some time. It is this key low volume node right here. This is a rejection area that we've seen over and over, and the price here is 92. The 92 separates the upper distribution from the lower distribution, and as I said before, as we push through the lower distribution and are unable to take back the upper distribution, then the most natural thing to happen is for it to roll over to 74.50. If you recall, that was the plan 2 days ago. So where are we now? We are at 91. We're holding in this area. We are in range, out of value on the extreme of yesterday's range. We have basically had a pretty big reversal, and it's really a coin toss as to whether it pushes up and becomes responsive back into the 1907.75 point of control, yesterday's most valuable price, or if it's likely to push down to 74.50. In my opinion, looking at this, it's likely to become, my primary hypo is becoming it's likely to become responsive early, see a rejection, and I expect it to cross through 92 and push to 74.50. The catch here is that we're on, Fed crack, and the market's very, very, very much driven by what the Fed will do, and the fact that the non-farm payrolls came in so weak. And recall that September's non-farm payrolls, of all the non-farm payrolls for the year, September's are usually the ones that get revised the most. I'm going to say that again. September is the non-farm payroll release that is most likely to get revised the most. And so, given the bad news on non-farm payrolls, that's good news for interest rates. We're seeing some risk-off activity. We're seeing gold rise. We're seeing a pop in crude. We're seeing the euro pushing up. But that could be seen as a positive thing, as a delay on interest rates, and it could very easily push up. My point, so how do you trade this conflicting information? My point is, I am going to look for responsive buying and then selling down to 74.50 given the fact that the economy is showing some weakness, especially in unemployment. Unemployment or higher non-farm, lower non-farm payrolls means that fewer people are getting paid, fewer people are consuming. Uh, uh, it affects earnings. It puts a burden on unemployment, the unemployment figures. It puts a burden on public services, blah, blah, blah. And overall, it has a negative effect. I have to go with that play, but I'm not an economist or an analyst. So my job is to come in and look at how does it treat the 92 on the open right here, and what kind of a rotation do we get up and down on the open? Do we get a higher rotation up and a weak rotation down? Do we get a strong rotation down and a weak rotation up? And then I start to play from that side with the most aggression. Rotations, rotations, rotations. Very, very important. And that's why you see this mess here of numbers, these rotation numbers, is because I'm tracking the rotations and I'm tracking what the delta is, or how much volume went through on the rotation on a delta basis, on a trade on the bid versus the offer basis. And so otherwise, I would simply clean up my charts by just trading with this, right? Just looking at this. The little numbers there show me historically what's happened, and it helps me gauge which way the market is likely to move based on the strength of the rotations. Anyway, I'll leave you with that. I want to remind you again, I want to thank those people who attended the AAQ yesterday. It was a huge turnout. We had big, big numbers. We almost actually capped out the GoToWebinar subscription amounts, registration limits that we have, which is about 1,000. And a lot of people asked a lot of good questions, and it was tried to get through it very, very quickly. And I went over a statistical study, shared a statistical study, some fresh numbers for those people who are interested in doing their own statistical homework. You can catch that recording. It's open to the public. You can catch it on my website, or you can catch it on Twitter, on my Twitter feed, twitter.com//FuturesTrader71, and you'll see the link on there. Good luck. Have a great weekend. It is Friday. Let's not take extraordinary risk, or let's not take stupid risk going into the weekend. As always, good luck.